is interesting though.
Alrighty, we're back. This
What up?
week
What
in
up?
crowdfunding, our third live show, I believe. So we're taking a little bit of a different approach this week. We are going to talk about pretty much just one topic. We're going to talk about StartEngine because there's been so much news around them. So I guess it's
Yep.
multiple topics, but we're going to focus on StartEngine because it's been a huge week for their business. So anybody that has been following StartEngine Private, which we had talked about probably 4 or 5 episodes this week in crowdfunding episodes ago, they launched and their first raise was Attentive, which is an interesting software company. So Connor, why don't you tell everybody about Attentive and what your takeaways are so far?
So let's see. Attentive. They're an SMS marketing like software platform company. So
Hmm.
they have a lot of partnerships with a bunch of big companies and really use SMS to target and retarget customers visiting
Right.
online e-commerce stores.
Hmm.
Um, so I don't know if you used it when you did the coffee company. I used SMS marketing for my apparel company,
Never did
and
it. No.
for me, it definitely helped a lot.
Okay.
I I mean, I just had an app and I went the cheap way about it, but even then it's like, okay, you see a customer, they checked in, but they didn't fully check out, but they put their number, everything down, they just didn't pay. And then the SMS marketing would then reach out to them 6 hours later, hey, you didn't check out. Why don't we get you to check out? And I think I probably had maybe a 50% conversion with that. But I
Wow.
think this Attentive, it's something about the software and how they use this SMS marketing. I think it's much more engaging because they're able to get they're able to get these businesses to have a 25x ROI on investing
Okay.
in Attentive. So, and I think they're able to get a conversion rate of like high 80s or 90s. Like it's really really impressive looking at it. I was just like,
Okay.
wow. So they're the
It works.
global. It works
It works.
really well, and especially for
Okay.
these big brands when you have so many people that are going through the e-commerce, and it's a
Hmm.
big problem with e-commerce not fully checking out, like stopping halfway through. That's a massive problem. So this really helps address that problem and helps boost sales, boost revenue a lot. And I guess another key stat is 30% click through rate, which is really good. They drive 20% of total online revenue for businesses creating through SMS experiences. Some of the partnerships, Pura Vida, Urban Outfitters, Jack in the Box, Coach. It's a bunch of big brands, right?
Hmm.
Big brands. Um, so yeah, I thought, it's interesting first, StartEngine Private, but
Yeah, big company, big problem, big solution, right? So
yeah,
Start Engine Private comes out with a bang, um, and I think you and me kind of expected that when we talked about it last time. I mean, now Start Engine Private is just for accredited investors, which means it's not necessarily crowdfunding; it's under Regulation D. But let me set the scene before we move into. I know what you're going to say. So what I didn't understand about what Start Engine Private has become is that the company itself, Attentive, is not involved in it at all. So
really.
basically, yes. So basically, what Start Engine is doing, and I'm paraphrasing, and you can look this up, is they are buying shares from existing Attentive investors and selling them to Start Engine investors. Let me read it here.
Okay.
The disclaimer that they
That's
have on
actually
their
really
site.
interesting. That's
Yeah.
really interesting.
So it's Attentive Mobile Inc. Attentive is not participating or involved in this offering. When you make an investment in a company in Start Engine Private, you are purchasing an interest in Series 4-1 Series Attentive, a series of Start Engine Private LLC, a Delaware LLC. Start Engine Private, which was created to hold shares of a privately held company. The availability of company information does not indicate that the company has endorsed, supports, or otherwise participates in Start Engine Private. Series Alternative or any of its affiliates. Series Attentive does not purchase shares in the company directly from the company. An investor will not directly own or hold shares of the private company, but will instead will own member interest in Series Attentive, which is either directly or indirectly will hold shares in the company. There may not be a one-to-one economic parity on the share value of Series Attentive shares and Attentive shares. StartEngine advisors will file as an exempt reporting advisor that manages StartEngine Private and Series Attentive. StartEngine Advisors is not registered with the SEC as an investment advisor. Mouthful, but I think you get the gist of it.
What do you think about that?
I was shocked. I mean, I was doing my due diligence before we went live, and I was just like, I didn't know that. So these companies have nothing to do with it, which is very different than crowdfunding in general. I'm not saying it's a bad deal, but I think that is a layer. Not, I mean, I wasn't expecting it. I mean, and it's not. I mean, it's right in front of you. It's the first kind of data that StartEngine puts out there. So if you're investing, presumably you would read that. I don't know. I does it make me want to invest less if I wanted to invest more? I don't know, but it's definitely a wrinkle.
Yeah, how I interpret that is VCs can then sell their shares to StartEngine if they want to just recognize a loss. For example,
Right.
you know, Attentive was a $7 billion. It was valued, I think, at $7 billion, 21. Well, now we know because of the valuation bubble, it's no longer $7 billion. Even if
Right.
it grew, I think we talked on the phone. We were saying it's probably like 4 billion, maybe 5 billion. Like that's probably a reasonable estimate.
Yeah.
So if these VC firms, because it's still an unrealized loss for them and their fund, if they just want to write it off and start fresh in 2023, so they can just clean the slate with the fund and then get going and not have to worry
Return
about
capital.
that.
Yeah.
Return. This seems like a very good solution, and it resets the valuation of Attentive, which is the really interesting part, which means you can then invest in that company and not kind of suffer from the valuation being pumped so much with all the hype and all the VCs buying in as the valuation soared all the way up to 21.
Mm-hmm.
You can kind of, it's kind of like wiping the slate clean. So I think that aspect's interesting, and it's interesting knowing that StartEngine more or less is the broker.
Yes, more or less it seems like. I mean, not technically, but yeah, that is what they are. And I think what what we were talking about before earlier today, which I think is an important point to hit on, is the availability of information on the company. So talk about the layout of the StartEngine offering. I mean, you can click on the link below if you're watching, and talk about maybe what's missing.
What's missing is that, well, I guess the entire thing was just confusing because I didn't realize StartEngine was the broker of this entire deal. I thought Attentive was selling shares to the public at X price, but I didn't know. We didn't know the percentage, like the float percentage of how many shares they're selling.
What the float is, yeah.
Right. That tells you what the valuation of the company is. And there's no valuation you can find other than the 2021 valuation, which is really inflated because 2021 was the valuation bubble. So if you're saying, hey, the valuation was in 2021, that kind of sets the anchor, sets the price, the expectation all the way up here, when in reality, it's definitely at least a 40% discount. Just because
of the market.
There's no more free money in the economy.
Yeah, I mean, and you basically you scroll down the offering page, and it has that valuation, 6.97 billion. It shows the growth. Now, everything that we're saying, it's for accredited investors, so you would assume that they had the knowledge to read and understand the market, not only as it relates to just the startup, but its place in future growth and IPO. But the thing that I can't find is a balance sheet or financial statements or anything like that. And that was shocking to me. I just did some preliminary research on the Edgar database. Couldn't find anything.
Yeah. Did you click the SEC filing?
Yeah, the SEC filing link didn't work. I'm not saying that this information doesn't exist, but I would be interested to see the information, because that is why you invest. I mean, you have to know the fundamentals of the company, right?
Which, yeah, it can make sense, though, based on this entire situation. StartEngine doesn't know the information because they're buying the shares from the VCs.
Right.
So they're not even going to Attentive to get the shares. So Attentive doesn't have to release the information to them.
They don't have to release the information. StartEngine's not going to go looking for it, right?
Yeah. But you can't find, like, I was trying to look up revenue, couldn't find any revenue. And then even like the only comparable I could find to just kind of sort of get a similar valuation. And it's not
Mhm.
exact, but it's Klaviyo. So
Yeah.
Klaviyo does, SMS, but also email marketing, where Attentive
Mhm.
is hyper focused in SMS marketing. And Klaviyo is, I think, they just had their earnings today, so now it's under $7 billion. But that's the only comparable I could find. So it's kind
Yeah.
of tough because if you want to invest in a company, you need to know the valuations, right? You would think. So
Yeah. I mean, well, you would need a basis to be able to value them. And I
yes,
think that's the problem. And what again, like if we're missing something, somebody please tell us. But I can't find the information. And that's I'm sure we are not the only ones saying that.
and setting the basis at 2021 is a
Mm,
very bad basis to set.
yeah, it's a totally different world than it was 2 years ago financially, and so many, but
Yes.
especially in the startup market. Wanted to do so we didn't just focus super on Attentive. I don't know if you saw this, Connor, but so this might be breaking news for you. But I did a little bit digging on StartEngine, and it looks like um, this is just a headline. Stripe Series LLC is taking reservations for a possible upcoming round. Join the waitlist. So it seems that the next ball to drop in the StartEngine private is Stripe,
That's exciting.
and that's exciting. Um, so I'm interested how you think about this offering now, knowing more about StartEngine private, and now knowing that Stripe's next. How would you look at that yourself?
So I think this is a good. I kind of see this idea as a startup's MVP, where
Hmm.
they're just trying to figure out if the market's interested in their product and getting some traction. And it's not going to be the final product. It's going to get better and better and better. They just need to get it going and slowly iterate over time. But the
Right.
fact that now they're getting Stripe shows to me that they're going to be very active in getting these highly taught after startups and figuring out how to provide accredited investors that wouldn't have access to the shares, at least the opportunity to invest in the shares. Now it is,
Hmm.
I want to know kind of their valuation and I want to see the financial statements, balance
Yeah.
sheet to make a good investment or to at least see if I think it's a good investment. But if they do get Stripe shares, that's going to be really interesting. And you're going to be able to have a better understanding of what you think the company should be valued at.
Yeah. This is just something that came to my mind, which is okay. So if StartEngine is going through these transactions, right? Obviously, there's going to be people out there that want to sell their shares. This is a very illiquid market to begin with. But that means that there is at least one buyer in the market. And I wonder how many other buyers there are in that market. Is
Yeah.
StartEngine like the only buyer in the market right now? Or are, and is that what's going to help fuel this growth of StartEngine private? Like StartEngine might be the only investment vehicle to sell those shares to for the foreseeable future because now they're going public,
Right.
right? Does StartEngine almost become like a one of one in that sense? Like they are kind of, it's not necessarily about what they're offering potential investors, it's what they're offering potential sellers.
Yeah, it's interesting because I think this is a blue ocean strategy where
Right.
StartEngine is creating its own marketplace where now it gives the VCs an opportunity to create more liquidity if
Hmm.
an investment's going bad, which was a problem with VCs, but then an opportunity for accredited investors to then buy a share in a good stock that was just previously bought way too high for it to make any profit,
Hmm.
right? So I hear that that kind of gets me excited because I'm thinking, what if, VCs, when they make a bad decision, they have to suffer the consequence of, taking the loss, writing it down, but they can get back in the game. But then it allows accredited investors and hopefully soon non accredited investors an opportunity to then buy those shares at a reasonable price because it got wrote down. The share price got wrote down so much because it was overvalued in the beginning. And I don't know, it makes the future seem very promising.
It's, I mean, any sort of liquidity in the venture capital market, I think people are going to be excited about.
Mhm.
And I don't know. I think what's a huge wrench in things is I did not think StartEngine Private was what it is.
Yeah.
And I wonder how many people thought that way. And I wonder how it's going to be received. So it'll be interesting to see how well this Attentive raise does. If they go ahead with Stripe, I mean, that one will be even bigger.
Mhm.
And I'm sure that will send waves across, I mean, Stripe is the bell of the ball, if you want to say that's,
For the private
for
companies that have an
for
IPO.
private. Exactly. So, I guess, yeah, go ahead.
Well, I was gonna say, so I was looking. StartEngine Private's issuing 66,667 shares. They're
Right.
listed at $22.50 per share. So that
Right.
comes out to 1.5 million.
Right.
So it doesn't see. It's not going to be a significant chunk of the company.
No.
But it's interesting. I thought it was interesting breaking it down that much, where it's okay. This allows opportunities for accredited investors who don't have the opportunity, even though it's a small amount, to slowly break into that industry. So Stripe,
Right.
what do you think the price for Stripe's going to be? Let's just, even though we really have no idea, if you had to
Guessing?
guess, yeah,
Guessing? I mean, okay, so you're saying you got a $4 billion valuation, let's say, of Attentive, and you're selling a million worth of equity.
yep,
So that's okay. You figure what was Stripe's latest valuation? Like 50 billion?
yeah. But remember, Adyen had a really bad earnings report and lost 40% of its value, and that's a public company. So you have
Okay.
to assume, even though I think Adyen was a competitor to Stripe and was considered like second fiddle.
So this says here that they were valued at 50 in 2023. It was 152 billion in 2022.
Okay.
So let's go with 50, and they're giving out what, 50,000 shares, 100,000 shares. I mean,
It's tough because you don't know how many shares
200
are
a share?
outstanding.
200 a share?
Yeah.
Because you have to figure you're multiplying it by a factor of 10 to 12, because the 4 billion to the 50 billion, right?
Right.
I mean, that's
Yep.
200 a share. I mean, that's a lot of money. Like I mean, even for accredited investors.
Would you be interested in like looking into it if you were an accredited investor?
Depends what my portfolio looked like and how much risk I was able to take at this point. But I mean, they got written down from it says here 152 billion down to 50. So they've already been written down 66%. If you believe in the business model and you think it's going to last, I don't see any reason why not to get in at that valuation. I mean, if you truly believe that it's a $150 billion business, you're getting in at the right time.
As Warren Buffett says, it's never a bad time to get to invest in a great company.
Mm-hmm. Can't agree
Although
more.
maybe in 21.
Yeah, maybe in 2021. Do you want to talk about just StartEngine's crowdfunding and the fact that they're almost done raising?
Yep.
So
what do you think about that? What do you think about, I guess, set the table for us and then tell me your thoughts on this being the last week.
So it's the last week of StartEngine's own. I think this is a Reg A raise, if I'm correct. It's obviously, StartEngine has become the second, if not the biggest company in equity crowdfunding. I mean, at least top three. I think personally, it has been great as someone who loves equity crowdfunding to see them have such successful raises, because now not only are people investing in companies that are equity crowdfunding, but they're investing in companies that basically enable equity crowdfunding, and they're helping that movement. So I think in episode 12, we had Tim Scafaria on from Hubtoss. He said he was an early investor in StartEngine. I think if you believe in the equity crowdfunding ecosystem and its growth potential, I mean, StartEngine is one of the big guns. So, I mean, you put, your faith in them. Yeah. I don't know much about their intangibles. It's not something I'm not looking to make investments right now, but I don't know. What do you think? I think it's good for the ecosystem. I don't think it's a huge headline, but I think their continued success raising has been good news.
I think it's probably a two-headed race between WeFunder and StartEngine, between
Hmm.
winning the industry, winning the market, and not only winning but being very dominant in the market. And
Yep.
I was doing some research. They have the market, growing 14.3% compounded annual growth rate over the next couple years. Like I think
Uh-huh.
till 2030, they expect the equity crowdfunding market to reach 6.8 billion. And then StartEngine's 5x their growth over the past 2 years, which is really
Which is
impressive.
great. Which is
And
great. I
then,
mean,
yeah,
they've grown at a considerable pace, and the quality of companies on that website is seemingly very high.
yes, and it seems like they're consistently pushing to try and raise the bar
Yeah.
for what the companies are and what their campaign looks like. And then two, with this StartEngine private, even though it wasn't what we expected, I
Hmm.
think it's even more exciting the more I think about it. The fact that it's going to become a broker and it's going to now it's going to become a market to where you can go there and buy shares of private companies, really successful, really big private companies. And that's exciting. So it seems like they're going to continue to try and innovate and try and explore different avenues to continue to grow. And I was talking to one investor and he said, look, I used to invest in startups. Now I just want to invest in StartEngine because to me, if you can invest in casinos, why don't you invest in casino? The house never loses. That being said, if you know the equity crowdfunding market's going to grow, why don't you invest in StartEngine?
I never thought about it that way. Did I lose you there? I think we had some technical difficulties there. Connor, are you there? Are you there? All right, we lost Connor, but I think what he said about StartEngine is an incredibly good point, and yeah, house money never loses. So hopefully, this crowdfunding ecosystem continues to grow at the rate that it has been. So for Connor and myself, thank you for tuning into This Week in Crowdfunding this week. It is because of your guys' support that we enjoy doing this so much, and we are so motivated to keep doing it. So keep liking, commenting, and subscribing and engaging with us. And we will see you next time.